Welcome, everyone. If you are looking for high quality day trading education and professional level trade analysis and dissection, you, my friend, have come to the right place. My name is Pat Mitchell. I have been a professional day trader for the past 11 years, and I'm here to bring you exactly that professional, high level day trading education, all for free right here on YouTube and on X. Now, there are certain days that we know we want to go long or we know that we want to go short. And it doesn't set up. Now, I'm sure most of you have heard that, but have you ever expressed that in your trading? Like, have you ever actually looked at risk? See, for myself, like I said, I've been a professional trader for 11 years. There's a reason why I've been able to do this successfully for as long as I have. Now, I know there's a lot of people out there that'll say that they've been trading for decades or whatever the hell it is, for years. And whether that's true or not, who knows? But just judging by some of the things that they say and how they trade, I highly doubt that they've been able to trade for as long as they have, because the one thing that they don't think about before they execute a trade is risk. And that's why a true professional trader could always look at somebody's trade entries or a trade that they took, not one trade. You can never judge a trader based off of one singular trade. I understand that, but for the most part, as a whole, that's how you can spot these frauds out there. That's a whole other topic of conversation. But I'm going to pull up the charts and I'm going to explain risk and why it's so important in our trading and how to look at it before we execute a trade. This will be a great lesson for you guys out there. So hang tight. Let me grab my charts. Okay, so now that I have my charts up, I took one trade. Well, actually, two trades, but on one stock or ETF, however you want to look at it. And the trade that I really wanted here today was Q's long. Now, you might be looking at it and be like, well, I've seen you execute a lot further away from levels than this, Pat. What makes today so different? It becomes risk. It's a matter of risk. Let me show you guys something. And I'm just going to stretch this chart up and pull it up. So when we have a level that we're looking at for executing, most of the time I have no problems executing when it's not far away, but far away from that level. I start averaging in. Remember, I'm not trading small positions. I'm trading rather large contracts or large options positions. So I have to start in and start averaging into my trade. I have no problems with that, but I'm always thinking about risk. Now, the level of execution here today was 513.32, which was the previous close. Now, with that said, what else do we have below that? So if that's my area of execution and I'm going to start in here, right? And you may say, but it confirms strength and it confirmed multiple times. And you would be correct. But again, where are you going to fucking risk off of? If you execute here, right at lows, that was 514.32. The previous close is 513.32. That is 1 point just to the area of execution. That's not what you're risking off of, right? So now let's take a look at the daily chart, right where my crosshairs are. And I'm going to use a level just to snap it so then you guys can see. My magnet is on. I got to turn that off. So then you have this. That's the 100 SMA, which was actually slightly lower. Do you see how it's 512.33? So now it becomes 2 points. 2 points if you were to start in here. That is 2 points. And that's not exactly where you stop out because it touched the 100 SMA. Remember, if it comes down, so let's say you execute, it comes down, which is normally fine. This is your area of execution. So now you're into it for 1 point. Now it comes into the 100 SMA. That now becomes 2 points. Just because it touches that level, you're not obviously going to get out of that trade, or at least you shouldn't be. You need to wait for true confirmation. And sometimes that looks like this. And sometimes it looks like this once it breaks that test. So that 2 points now becomes 2.25 to 2.75 quarter points. Well, that's ridiculous. It's too much. It's too much for a singular day trade where it hasn't confirmed on the daily chart. Now, this brings me to my next point. Remember, we need to not think so surface. We need to think in layers. And it's not just about that, but it becomes about the daily chart. So that's the intraday chart. Sure, your executions are about the daily chart, but let's take a look at the daily chart, right? So it hasn't confirmed yet. It got sucked up off of the 100 SMA, but there's no true confirmation there. Now, I wanted the long badly because this is where we get this rounding effect on the daily, especially when we gap up, pull back into the previous close, comes up. And generally we will test the first level of resistance, which would have been my target work. That's exactly where it went to. So everything fell in line. The problem became risk. And if you're not thinking about risk and you're giving into that emotion because you want to get executed, you're really failing as a trader. So I want to talk about, and I just erased all these levels and I'll have to put my level back up. Just give me 1 second because I do have a point that I really want to make here. So it's very easy to execute a trade, and this is the problem. A lot of traders will do this. They'll execute a trade, not think about risk, and they get rewarded for a piss poor trade. And a piss poor trade can always be labeled as a trade where you're not evaluating risk prior to entry. If you're trading to strategy and as a true professional, and you're going to actually have longevity in this as a career. So traders get rewarded all the time for bullshit trades, and they'll give themselves a pat on the back. Let's say you took, for any of you guys watching this, and I don't argue with me on this because you're wrong, because you didn't evaluate your risk. Let's say you did execute this trade and you thought it was a good trade. I'm here, a professional that has been trading for over a decade, that has wild success in this. I'm here to tell you, you fucked up. And I hope you listen. And I'll tell you why. Because trades like this, you can execute not thinking about risk and get away with it 100 times, right? And for years. And I see traders that are out there that run services that never think about risk. They think they are, but they're not. And they've got away with it for years. It is only a matter of time before you end up with nothing. Now, I've seen it. I've seen it a lot. I've seen it with beginning traders, novice traders, intermediate traders, and quote unquote professional traders. It is just a matter of time before it catches up to you. So this becomes a question of how long do you want to do this for? Is this a career path that you are taking? If the answer is yes, which I would imagine that's why you're fucking here, you got to start evaluating risk. So again, for any of you guys that took that trade long and you gave yourself a pat on the back, you need to get to the truth of the trade. And the truth of the trade is simply you fucked up. You got rewarded for a piss poor trade because you didn't evaluate your risk prior to entry. Now, some of you may say, but I would just stop out at the previous close. Well, that's fucking silly. Why would you do that? Take a look at that. If you executed here and risked off of the previous close, you're stopping out right above support. Do you realize how ridiculous that is? It's stupid. That is dumb money. That has a big stamp across your forehead of dumb money. That's what that is. And that's why dumb money, retail traders, suck for the most part. 90% fail. And that's just to achieve true consistency. That's not actually make it long term. That number goes down to 1% in 5 years. If you make it to 10 years, that's 0.1%. So listen to a 0.1%er when I'm telling you, you can't do that. You might be able to get away with it, but you're going to constantly stop out too soon. Do you see how that becomes an issue? These are all things that most traders fail to mention when they're making these fucking videos for you. It's important to note, it's important to realize that everything we do as traders it's so crucial to do it from a professional standpoint, from the utmost professionalism in our trading. Now, not all of you are going to understand this, and some of you, I mean, I've been doing this long enough. I know that there will be people fighting me on this. I won't engage with you because it's not worth my breath. If you're truly wanting to learn, just listen, because I'm telling you, what you've done is wrong. So let's talk about what I did trade today. So this is interesting. And I've talked about this 1,000 times before. And I know that this is a little bit longer of a trade analysis and trade recap here, but that's fine. I got all the time in the world. If you miss the long, so as a day trader, day trading, right, on an intraday perspective, there is always a long and there is always a short. That's why it doesn't matter whether it's a red day or a green day on the chart. There's so many people out there that when they look at a trade, maybe I went short and it was a massive green day. It doesn't matter. You are a day trader. You need to define what type of trader you are. And I am a day trader looking for short-term opportunity based off of first reactions into valid support or resistance levels. That's it. That's my definition of a trader, as how I trade, right? So myself knowing that if I miss the long, I simply need to be patient and wait for the short. That's exactly what I did. Now, I didn't make a lot of money today for what my average is and what I normally make, but I still locked in $1,735 by just being patient. Now, that's more than most people make at their day job for one full day's worth of work. Some of you may make more. I mean, I know at the height of my welding career, minus bonuses like click bonuses, QC bonuses, because I was a pipeliner, it was about $1,000 a day, sometimes about $1,200 a day, depending on how many hours I worked. So making $1,735 for sitting on my ass in my office, in my beautiful piece of land here in Paradise, Costa Rica, where I own so many acres, it's ridiculous. I'll take that. So $1,735. So let's go over this trade. So for those of you that may not know, up here, if you take a look, it's the 599 puts that I was working. So if you look up at the level 2, you'll always be able to see the strike price. So 599 puts and executed first as it comes up. Now, I was watching this to hit a specific price point for me to start in, and it was missing it by literal pennies. Here, and I believe here is where I finally, because it ticked over to 598. Because my area of execution and then the 5 EMA, which was just above, that's where it just gets me into a tolerable amount of risk. So that's where I'm waiting to execute. I work it down to the penny where I'm going to start in. I know on some of these trades, it can look very random to you, but that's what it comes down to. I'm waiting for literally the penny that it comes into my risk profile where I am comfortable with that risk. So I execute that first trade right here, right where my crosshairs are. Execute, pay myself right there. And then on this, because I know that I have a valid level and I've been waiting for that level, there's trend as well as the 50 SMA on the daily. I execute that. I execute coming up into the level. It's fine if it wants to go a little bit higher. I'm okay with that because I was watching Qs. Qs had a level. I did erase another level. This was the level 4 today. So Q's was racing up into that level and it couldn't quite make it as SPY was up here. And I said, another trade that we could take is wait for it to slice through, pop back up and retest. And you could possibly get another trade out of it, which there was more than enough meat on the bone to make a few bucks. But I executed coming into the level as per my strategy, paid myself on the way down on the secondary trade, and that was it. So on 2 trades, I locked in $1,735 by being patient. Now, if I would have executed this long, I probably would have made anywhere between $5,000 and $7,000, possibly more. But it would have been a shitty trade. And this is why people need to stop equating P&L with it, whether it's a good trade or a bad trade. That has no bearing on whether it was a good trade or a bad trade, ladies and gents. I hate to break it to you. So if you want to learn how to actually do this professionally from a professional, come to tricktrades.com. If you don't want to, that's fine. Continue wandering around YouTube, as well as you can enjoy my free content here on YouTube. And don't miss our power class that's coming up on March 4th at 6 p.m. East. This is a mentality and day trading psychology power class that you've never seen before. I guarantee it. This will open your mind and your eyes to a whole new idea of day trading psychology. A lot of day trading psychology is very antiquated, and it was brought up and talked about, trading in the zone. Although a lot of that is very valid, but you got to remember that that's very much prior to algorithmic trading. And, Douglas was an options trader that was more of an investor. So that's more investment psychology, which is it's similar, but it is different. So if you're a day trader looking for specifically day trading psychology, sign up and RSVP in the link in the description, and we'll see you there. Now make sure to like, share, and subscribe. You got to at least like it, and you got to subscribe if this is the second time viewing the channel. Ain't nothing in life free, folks. And I think that that's a pretty even trade. Adios, folks.